The South African Reserve Bank is largely expected to keep interest rates unchanged this week. In fact, many economists believe that the MPC has reached the end of its hiking cycle. However, given the continued upside risks to inflation, the key question at hand is when will the Sarb start cutting rates? RMB Economist Siobhan Redford joins me now to share her thoughts on the upcoming rates move. Thank you so much for your time, Siobhan. Have the markets fully priced in a rate hold, considering the upside risks that still exist and some new developments, for example, that we're having with the Red Sea?
For now, we've got the developments in the Red Sea, but it's not necessarily coming through as per se into inflation. And, given the data-driven environment that we're looking at, a hold is still very much what is being expected and is the most likely course of action for this MPC.
Yeah. And of course, we know that the big driver of monetary policy direction is the trajectory of inflation. And actually, we do have the December print coming out tomorrow for South Africa. But now we've had a number of prints coming out from the US, from the UK, that are showing a trend of hotter than anticipated inflation. Could we have the same situation in South Africa when we do get our print tomorrow? And if so, if it does go up more than what markets had anticipated, would it be a blip in a trajectory that is largely downward or not?
So I think it's worth bearing in mind that it's always a risk. I mean, it's a risk to that we can, also be surprised to the downside, but always a risk that we're surprised to the upside, which has been the trend, definitely overseas more than it has even been here, but, that we have seen happening in South Africa. But I think it's worth bearing in mind, even, last year with the second half of the monetary policy review, the South African Reserve Bank spoke about a bumpy road to target. And that is what we are going to be expecting from inflation. It's not going to be a smooth trajectory back towards that midpoint of the target. It's going to be bumpy. We are going to see ups and downs. And so telling where those, how high they are or how much lower they are is going to be tricky. And it's based on things that we aren't observing per se. So how food is doing, how food prices are, and how they have come through. Now, we know we were hit by avian influenza really hard in the second half of last year. And how is that now playing out as we start, as we go into December, which is a period where demand for meat, because South Africa is on holiday, is at a particularly kind of high point. So definitely always a risk that we're going to see upside, but upside kind of surprises. But, it is also worth bearing in mind, we could also see a downside surprise. That said, the moderation is going to continue. It's just not going to be smooth.
Siobhan, also there is the influence of the Fed and the issues surrounding a currency carry trade. And of course, we have seen the Rand weakening ahead of the inflation figure and ahead of the MPC as expectations for a Fed rate cut basically diminishing and the dollar strengthening. Looking at that, would you say that at this point the MPC does need to keep rates on hold and not cut, and maybe a cut would hurt SA consumers even more as the Rand would weaken?
That is a very tricky question. And I think definitely something that's, a committee like the MPC are going to be debating. It's a couple of things that are going into this. Obviously, the domestic economy is quite weak.
Yeah.
So prospects for creating of new jobs, we have continued to see growth creation, and that has been quite positive. But we do know that higher interest rates and also relatively high inflation, even though, or at least rather say prices for food and fuel. So even though the inflation might have come down, the prices themselves remain quite high, are having a material impact on consumers. And that's where interest rates, have their biggest kind of impact. impact for inflation. And so that's, something that they are going to observe. At the same time, there is very much a concern that you're going to have, exchange rate volatility, particularly in the run-up to elections, that, there is this weakness that we've seen recently as we saw the Fed pushing very hard against market expectations for a cut in March, and that, then leading to further rand weakness. And, while we don't import everything, that it does feed into our import prices and even into some of our services prices. And so you could see this pushing inflation a bit lower. However, the weakness is not going to be unexpected. That kind of weakness isn't going to be a huge surprise, even if we are expecting the rand in general this year to actually recover, given some of the very strong moves weaker last year. So it's really going to be about the trend. It's going to be about how long does this weakness last. So, if it's a week or two, businesses will tend to absorb it. If it becomes a more permanent change, that's when you see businesses having to change their prices, and that's when it's going to then affect inflation more materially, and that's what the MPC are going to look for. And a lot of these changes, they are going to wait for at least some sense of it in the data, because I think we are at a point where they do have to be careful, because if they cut too early, it's going to have an impact on credibility, on inflation going forward, and on the poor in general. But if they cut too late, it's also going to have an impact on consumers and push them far deeper into a difficult kind of situation than they currently are. Yeah. So does the Fed matter? Yes, it affects the rand. It affects our the cost of our prices through that, but it is not going to be necessarily the central point that they're going to focus on, but they will be aware of how it does impact the economy and prices.
Lastly, Siobhan, as we wrap up the conversation quickly, the composition of the MPC, where we know that now former Deputy Governor Kubeni Naidoo is no longer part of the committee. Does that have any impact on decision-making at this point?
I think there will be people out there who would say so.
Yeah.
I don't know if I quite feel that strongly. There are some members who of the MPC who are definitely seen to be of a more hawkish tilt, and when you speak to them, that is, that comes out. It doesn't mean that they're not willing to look at, the kind of dovish side, and when, everything is getting more difficult, or when they feel that inflation is coming down, that they aren't willing to cut rates. So I think it's definitely a difficult period. I don't think it's going to have a big impact necessarily on the hold. It will be interesting to see what happens when we kind of get to the cutting cycle, but also by that stage, the MPC should probably have at least another deputy governor.
All right. Well, thank you so much for your time and for your insights, giving us what we can expect out of the MPC on Thursday. That was RMB Economist Siobhan Redford.